Welcome to the Sharad Kohli show, where I try and simplify the matters related to economics, business, finance, tax, stock markets, overall investments. My aim is to augment your wealth, to increase your income, and to prevent you from incurring losses. I'm going to talk to you today about something very, very important. A recent SEBI data came, which was very revealing. This data says 87.7% people who are into F&O, futures and options, derivatives trading in stock markets, they lose money. I repeat, 87.7% involved in F&O lose money. Out of these, 92% are into option trading. Option trading. That's a very revealing number. And I'm here to not to just inform you about this number, but also to tell you the reasons behind. Another piece of data came that 18% individuals have opted out of F&O because of the losses. So why is it that despite 87.7% people losing money, why is it that they still indulge, that they still continue trading? Not for 1 or 2 days, but some of them have been doing for years together. Well, if 87.7% people lose, then obviously almost 9 out of 10 people are losing money. So what are the reasons behind these losses is the purpose of bringing this video to you. I'll bring you 5 to 6 reasons why these many people, or 90% people almost, lose money, especially in the options. And the first reason for this number is that it appears easy, but it's a difficult game. It's not as easy as it looks. It's a very, very tough game. It's not just a game of things going up or things coming down. It's not just limited to call and put. There is a lot more into it. So this looks simple, but is very complicated. It's very complex. I'm sure people who do must have understood by now. Second reason is that simply predicting direction is not enough. The timing and volatility also matters. Tell me how many times, if you heard people trading, or if you trade, how many times you hit stop loss? Your direction prediction might be correct. You predict a call, you take out of the money call, and you feel that this is going to hit. But then before reaching there, it touches the stop loss and there you go. So timing and volatility is also important besides the direction. There's so many times your direction may be correct, but timing and volatility makes you go wrong. Let's see reason number 3. Now, people who are into option buying must be aware of time decay. Well, options expire, they melt away closer to the expiry. It is this time decay which, despite your picking up the calls or puts are correct, but time decay makes it melt away. Your profit melts away for no reason. As you get closer to expiry, you end up losing more money because of the time decay. The time decay factor is very important, especially for the buyers, option buyers. Obviously, for sellers, this becomes a source of income. Reason number 4, that who are those people, those 12.3% people, because 87.7% leave, so there must be those 12.3 who are winners. These are financial large portfolio investors, large foreign investors, large funds, algo-based large traders. It is said in the maritime world that the large fishes eat small fishes. This is a classic analogy, that big traders, they suck away the profit of small traders. Or if I put it another way, small traders fall in the trap of large traders. Or if I put it another way, small traders end up giving their profits to larger traders. So foreign institutional investors, algo traders, large platforms who come out with big money, they end up, and of course algo traders who use sophisticated software and automated strategies, they turn out to be winners. Well, most of the individual traders just do by their whims and fancies or taking tips from here and there. Reason number 5, that this is indulgence. You repeat trading. Some time ago on my Hindi channel, I remember, I think even on English maybe, I spoke about revenge trading. What is revenge trading? You try and trade to recover your losses. You're not trading sometimes to make profits. You're only trading to recover losses. And market is very insensitive. It doesn't bother. It doesn't know that you're trading for revenge. You're trading to recover your loss. It will behave with you the way it behaves with any other person. So you end up doing revenge trading and you keep repeating it. Next week is going to be good. Next month is going to be good. Today was my bad day. Oh, I did this mistake. You will have a pileup of these reasons within you after some time. So repeated trading makes you accumulate your losses. Your losses go up. And last but not the least is that F&O trading is addictive. It is almost like, becoming an addict of this, because whatever you do as your mainstream work, you've got a job, you've got a profession, you're running a business, this trading makes you or pulls you towards itself, and you start losing interest in your own mainstream work. This is really, really addictive. I have seen people desperate to come out of this addiction. They actually need help. They find themselves unable to come out. Every time they train with optimism. This time I'm going to win. This time I'm going to win. But they end up losing. So the big messages which this data reveals is 87.7% people who trade in F&O lose. Out of that, 92% are option traders, 18% have dropped out. So choice is yours. I am not against derivative trading. I am not against F&O. I am not trying to discourage. I am just trying to present you the data and find out the reasons behind it. It is obviously up to you. There are firms in Gujarat and Indore. Once you trade, they'll fetch your data and they'll start making calls to you that, look, we'll help you with trading. Give us 25%, give us 30%. We'll give you the tips. It works for 2-3 days, 1 week, 10 days. But eventually, you end up losing, especially if you're into option buying, because that's too easy. Obviously, your loss is limited to the capital you inject, but then that capital too piles up into a very large amount most of the times. Then you end up recovering and you get deeper and deeper into it. So that was an analysis for you. It was just meant to educate you. I am not a SEBI registered stock advisor. It is up to you whether you want to trade or you don't want to trade. I just wanted you to know about this data, and more importantly, I'm sure data you must have heard at some platform, but more importantly, I wanted to bring you the reasons behind this kind of data coming out and being revealed by SEBI. If you want to get your investments assessed, there is a wealth X-ray service which one of our companies has launched. You can get an X-ray done of your wealth. 9811930920 is the number. You must have invested in banks, through FDs, savings, mutual funds, within mutual funds, equity, debt, stocks, property, gold, silver, bonds, post office. I'm sure everybody has got their own set of preferences for investing. If you want to get it assessed, by the way, 99% of the people who invest do not apportion their funds properly. Because of that, they either lose as opportunity cost the return, or they also sometimes get into direct losses. So you can WhatsApp on this number. A team member will call you. This is a chargeable service. This is a nominal charge. But once in a lifetime, X-ray can be done of your wealth as well, when you can do X-ray for your body. Until we meet again, goodbye. But before I go, a humble request, please do subscribe to the channel. This is a new channel started this very month. Your subscription will help me keeping myself motivated to bring you more such useful videos. Thank you very much for watching.